Okay, we have to talk about BYD.
A BYD car.
BYD.
BYD.
And the BYD comes with more features and trendy looks.
In just a few short years, this Chinese automaker has overtaken Tesla to become the largest electric vehicle manufacturer in the world. To put things in perspective, BYD produced over 3 million electric and hybrid vehicles in just 2023. Compare that to Tesla's 1.84 million cars, and it's clear that BYD is no longer playing the second fiddle. But it's not just China. BYD has exported 242,765 EVs to over 70 countries, including major markets like Europe, Latin America, and Asia, cementing its place as a global powerhouse. To put that into perspective, that is a 334% increase in just exports from the previous year. The CLSA predicts that by 2026, BYD will become one of the top 5 automakers in the world. This year, they're already in the top 10. So what has enabled BYD to burst onto the scene in the manner that they have? How did a company that started with building batteries achieve such dominance, that too in the automotive sector? And what does that mean for the future of electric vehicles? In today's video, we are going to explore the 3 success factors that have allowed BYD to so severely disrupt the global automotive sector, and how can we apply these success factors to any such businesses. BYD, short for Build Your Dreams, was founded in 1995 by Wong Chuan Fu, a chemist with a vision of revolutionizing battery technology. Initially, the company specialized in low-cost rechargeable batteries, quickly becoming the world's largest producer of cell phone batteries, supplying to customers like Nokia and Motorola. But in 2003, BYD made a bold move. They entered the automotive industry by acquiring a bankrupt car manufacturer and launched its first internal combustion car in 2005. And by 2010, they had already launched their first fully electric vehicle. At the time, it seemed like a risky bet. After all, they had no experience making cars, and that was reflected in the fact that they barely saw any profit through the 2010s. But Wong saw the potential of integrating their expertise in batteries with electric vehicles. Warren Buffett's Berkshire Hathaway acquired 10% of the company way back in 2008. While some people questioned the move, Warren Buffett said he was investing in the man behind the company. And it's clearly paid off, since BYD's stock has grown 1400% since Buffett first invested in the company. So why did BYD succeed where so many others have failed? Well, factor 1, it all comes down to vertical integration. While most automakers rely on suppliers for batteries, BYD controls nearly every part of the EV supply chain, from battery production to vehicle assembly. This gives them an enormous competitive edge in terms of cost control and innovation. Their ability to scale quickly without relying on external battery makers allowed them to cut prices, make their EVs accessible to a broader range of consumers, and provide a high quality product while undercutting their competition in the global market. Factors 2. The second factor to their success is that they are first and foremost a battery company. So not only do they make their own batteries, they also supply batteries to their competition like Tesla, Toyota, and Kia. In 2010, they launched their new battery, the Blade, a lithium iron phosphate battery with high energy density and high levels of safety. This battery is in demand all around the world, and this has been one of the most important factors to their success, their expertise in battery technology. BYD's dominance extends far beyond China. The company has made significant strides in Europe, a market once dominated by brands like Volkswagen and Renault. In 2022, BYD began exporting its electric models to countries like Norway, Sweden, and the UK, where they've been met with positive reviews for both their price and performance. In Norway, for instance, BYD's Tang SUV sold out its first batch within just 2 months of launch. BYD is already the top-selling EV maker in Thailand, Brazil, Colombia, and Israel, to name a few countries, and has a staggering 43% market share in Southeast Asia. Success factor 3 is the secret to BYD's success in global markets: adaptability and localization. They've designed cars tailored to specific regional preferences and regulations. While many Chinese automakers have struggled to break into Western markets, BYD's strategy of offering affordable, high-quality EVs with long-range capabilities suited and tailor-made to the challenges of the region they are selling their products in has resonated with consumers. They've also tapped into a growing network of local partnerships for distribution and after-sales service. India is an often overlooked part of BYD's international strategy, but it's quickly becoming one of their most important markets. Despite the country's slow adoption of electric vehicles compared to China or Europe, BYD is one of the few EV makers making serious inroads. So why has BYD been so successful in India? First, they've invested heavily in local production. Their facility in Tamil Nadu has been expanding, allowing them to produce vehicles tailored to the needs and price sensitivities of the Indian consumer. Additionally, BYD has leveraged its global experience to introduce EVs that offer better range and durability in India's varied and challenging driving conditions. But their success in India is also a sign of their long-term vision. BYD isn't just focused on today's profits. They're laying the groundwork for tomorrow's electric vehicle market in a country that could become one of the largest EV markets in the next decade. And local EV manufacturers like Tata and Mahindra should take them seriously. However, it's not all smooth sailing for BYD, especially in its home market. China, which has long been the world's largest market for electric vehicles, is starting to see a slowdown in demand. Recent data indicates that the rapid growth of EV sales is beginning to taper off, with consumers showing more caution amidst economic uncertainty and rising competition from new entrants in the EV space. They're also facing significant obstacles in Europe. The EU has announced investigations to find out how BYD is able to price its EVs so low. This was followed by the EU imposing tariffs on EVs being imported from China, with BYD's vehicles being levied a tariff of 17.4%. These tariffs are basically designed to protect the European car manufacturer and balance the playing field. Still, it isn't great news for BYD. The US government is already planning strategies and tariffs to be imposed on BYD and other Chinese EV makers because they know that domestic automakers are not going to be able to compete with BYD's prices. This has complicated BYD's entry into the US market even more. Warren Buffett's Berkshire Hathaway sold more than 60% of its shares in BYD last summer, citing the larger geopolitics around China and Taiwan and the fact that Tesla, in its effort to compete with BYD, has started cutting their prices, and both the companies are now in a fierce price war, which isn't always great for profits. This is also indicated in the fact that most players in China, apart from Tesla and BYD, are actually making a loss. So what does this mean for the future of BYD and electric vehicles in general? The answer is complex. While the Chinese market may be cooling, EVs are still gaining traction in other parts of the world. And BYD's diversified global strategy means they're less dependent on any single market. Moreover, the slowdown could push BYD to innovate even faster, improving vehicle range, battery technology, and affordability, positioning them as a long-term player in the global automotive market. While challenges remain, the overall trajectory is clear. BYD's relentless focus on innovation, cost-cutting, and expanding its international presence suggests that the company is in it for the long haul. With billions of dollars being poured into R&D, new partnerships, and production facilities, BYD is positioning itself to be more than just an automotive giant. It's aiming to redefine the future of transportation. BYD's rise from a humble battery manufacturer to the world's leading electric vehicle producer is nothing short of remarkable. With a presence in over 50 countries and ambitious plans to expand further, BYD is challenging the very definition of what an automaker can be. But the road ahead is still filled with hurdles. Slowing EV demand in China, intensifying global competition, and questions about the sustainability of EV revolution. Whether BYD can navigate these challenges will depend on its three factors of success: its ability to continue innovating, adapt to changing market dynamics, and maintain its focus on controlling its supply chain. One thing's for certain, the future of the electric vehicle market is being written now, and BYD is playing a major role in shaping it. Thanks for watching. If you found the video insightful, be sure to hit that like button and subscribe for more deep dives into the world of tech, business, marketing, and innovation. And let me know in the comments, do you think electric vehicles are our future, or is it just a bubble or a fad waiting to burst? See you in the next video.